Good morning and welcome to the workshop for week starting the 29th of April, Monday. Review of last week, sort of a pretty quiet week really, although bit of a squeeze in equities on Tuesday following the very poor manufacturing data in Germany and followed by a poor German IFO business climate survey. GDP in the UK was very positive, positive, not flatlining, more of a snail's pace now at plus 0.3%, but had a pretty bullish effect on sterling. US GDP, the other way, really weaker than expected, although still reasonably okay. That poor data, or not quite matching consensus, was offset by better than expected University of Michigan consumer sentiment. So all in all, that helped to propel the Dow 165 higher on over the week. The FTSE was up about 140. Gold, that was a big mover. That recovered $57 after the previous week's very sharp falls. Crude, that was stronger as well. All sort of very risk on really. Euro was flat against the dollar, but sterling, the big beneficiary, over 240 points higher on cable. That's what, sort of 1.6% higher. This week, it's all the focus is on the ECB and non-farm payroll. We've got the FOMC as well meeting, but I think it's the ECB and the prospect of a rate cut. So let's just have a look at the data that's coming out. We have pending home sales in the US today, but in fact it is going to be pretty quiet today anyway. We've got a holiday in Japan, so we're not really expecting too much. Markets have been pretty quiet so far for most of the morning. Really, it kicks off. We can jump really through straight to Wednesday, really, when we have the ISM manufacturing in the States, and we have the first bit of data as well out from the payroll agency ADP, the non-manufacturing employment change. Unchanged figure from last month. It can be quite volatile, the ADP number, but it is a precursor to non-farm on Friday, so that will have an effect if it's wildly different from the 153,000 expectation. We then have the culmination of the Federal Reserve's rate setting committee meeting, FMC statement at 7 o'clock in the evening. Not expecting any change there, although further discussions about QE may propel the markets in either direction. And then Thursday, the first of the big days this week, the ECB rate announcement is at 12:45, and you'll see from this particular calendar here, we are talking about a rate cut from 75 basis points to 50 basis points. Definitely warranted if one looks at the peripheral Eurozone countries, economies. But if you listen to Angela Merkel, and she's probably quite right, if anything, Germany probably needs slightly higher rates, but that's the Eurozone for you. Has it been factored in? Not completely. If we do get a cut, I suspect the euro will fall from the sort of levels we're seeing on Monday morning so far today. There was a press conference later on at 1:30. We'll know more by then. We then have the big event on Friday, which is non-farm payroll. Non-farm excludes the more volatile farming sector, which is more seasonal. We're looking for 155,000. I would not be surprised if we get a revision of the previous month's data, which was incredibly poor, and there have been a lot of revisions of late, so I don't see why that should not happen again. The unemployment rate has also been a little bit volatile, but 7.6% unchanged, and the average hourly earnings we'll keep an eye on as well. That is then followed up by the non-manufacturing PMI, which is not quite so important, but then we have factory orders as well. In fact, that's less important as well. Really, non-farm, let's leave it at that. That's the one to focus on. The rest of it probably doesn't matter. As I said, key event, keep your pencil sharpened for Friday. Thanks very much for listening. We'll reconvene on Thursday at 8 o'clock. Bye for now.